Hi, Sharon. How you doing? I don't think your mic's connected. Joanna, should I just get started or?
Yes, that would be excellent.
All right, great. So good afternoon, everyone. My name is Anthony Abney. Matter of fact, let me go ahead and share my screen. So I'm your host or presenter, whatever you want to call it. I have a company called Blue Water Bookkeeping, and I'd like to talk to you today about getting ready for this grant application, making sure that your financial statements are good to be ready to go ahead and submit for this application. Let me just the next slide here. So a little bit about myself. I was a business counselor, and I've also worked in finance. So I worked in banking, venture capital, and private equity as well. And basically, my business, Blue Water Bookkeeping, spawned from my experience of working with minority-owned businesses and helping them with getting financing. I was also the chairman for this grant program that you're applying for when it first kicked off. So I helped with the design process and the decision-making process for how the grants are done. Happy to answer any questions that you may have around what do your financials need to look like for this grant, or just period. So I'm hoping that this can be a dynamic presentation. I don't want to just give you a whole bunch of information without giving you the opportunity to share any questions or thoughts that you may have. So I'm going to stop and ask for if anybody has any questions, and if you do, please take yourself off the mic and go ahead and ask anything that you have. So then also about my company, Blue Water Bookkeeping. So we provide financial management and bookkeeping services to small businesses. Again, I have a background in finance, working with minority-owned businesses. So that's my specialty. I like to help diverse founders. I'm QuickBooks certified, so I have my certification on how to do bookkeeping in QuickBooks, and I taught financial management to small businesses, and I help companies with managing their finances. All right, let's go ahead and get started. So today's presentation, what I would like for you to walk away with is an understanding on what to look for in your financial statement. So that's your income statement and your balance sheet. What to look for so that you know, okay, what may need to be corrected. And then also I want you to understand the most common bookkeeping or accounting mistakes and how to fix those, or how to avoid them. If you haven't made them already, how to avoid them. So why is this important? Why do people, why care about having accurate financial statements? So for a few reasons. Yes, you're applying for this grant. You're hoping you're going to get it. But we all know that everybody's not going to get this grant, even if you do a really good job at making a really great application. It's still, it's going to be more demand than funds available. However, if you take the time to have accurate financials, it's really going to help you, and it's going to help you in a couple of ways. It's going to help you with the the ability to get financed somewhere else. So if you need to get a loan from a bank or a different other type of source of funding, like uh, online crowdfunding, something like that. There's online banks as well you can apply to. All these places are going to require that you have accurate financial statements. So even if you don't get this grant or you apply for a different grant, to going through this process of making sure that your financial statements are good is going to help you with all types of financing, even if you don't get this grant. So I suggest you still give it your best effort because it's going to help prepare you. And that was intentional in the creation of this grant program, was to help everyone who's doing it. Even if you don't get the money, you'll be ready to get financing through other sources. And in fact, a lot of people who receive this grant also qualify to get microloans. So um, that's just something to keep in mind. And then also for your tax filing purposes, you want to have accurate financials so that you have to file your taxes on a quarterly basis as someone that's self-employed. You want to make sure that those financial statements that you have are accurate. So so that you're paying the right amount of money, right? You don't want to pay more than what you have to. And then if you're not paying enough, you want to make sure that, in the case that you get audited, that you are paying what you're supposed to pay, the IRS. And then this just helps you to understand your business and be able to manage it better. Understand like what are your financial goals so you can manage those. So that's why this is important. Now, okay, so how do you identify some common mistakes? Um, so the best way to do this to start off is to create, and I don't know how many people in here have QuickBooks. If you have QuickBooks, can you either just put in the chat that you have QuickBooks, or if you want to take yourself off mic, let us know that you have QuickBooks. Okay. Well, if nobody has it, let me see. Got some responses. Okay, great. So Sharon, you have it. Good. So yeah, so in QuickBooks, there's a section called reporting, and you can pull up a comparison for your balance sheet. You can pull up a comparison for your profit and loss statement, and in those comparison reports, you can compare the current period of time to the previous period of time. And so what I recommend you do is look at this on a quarterly basis. So pull up the quarterly performance for this quarter, and then compare it to how you did last quarter. And what you're going to look for in order to identify some common mistakes is do any of these numbers really jump out? Like last period was a number way lower than what it is this period. And that typically tells you that, okay, I need to look in this category to see if any mistakes were made in the bookkeeping. So any major leaps or major dips should be some type of indication that something may not be right. Now, it could all be correct, and you can know why that happened, but that's just a starting point to help you identify. So let's see what I'm talking about. Let's see what this looks like. Okay, so this is a sample company. This is their profit and loss statement, and here's the comparison that we talked about. So, and this is for 2021. So we're looking at the quarter between, for this one, the most recent one for them was July through September. And then the previous period was March to June. So that's the third quarter of the year, looking at comparing it to the second quarter of the year. And so if we look over here, we have percentage changes. And I highlighted these. QuickBooks won't highlight these for you, but I just wanted to highlight these so you can see, okay, what makes a big leap? So we see that our income was the same. It was 60,000. We see our expenses, our bank charges, for this quarter was 25,000. For the previous one, it was 10,000. So that's 150% change. That's big. That's a lot. So maybe that's somewhere we need to look, where maybe in this most recent quarter, we mistakenly put some transactions under there that should not have been there. And so why is this important? Why does it matter? Well, it matters because whenever you're applying to a financer, they're going to look at these categories, and this is going to tell the story of how your business did, right? So bank charges, for example, that typically that means when you take out more money than what you have in your account, you get charged for that. So if there's a big leap in that, then that might put out a red flag to a potential lender or a grantor or anyone you're applying for financing. It may be a red flag and say, whoa, wait a second, or why are you consistently taking out more money out of your bank account than what you have in there? Do you have a cash flow issue where you have more expenses than you have money coming in? Do the expenses get charged before you get your money? What's going on there? So that's going to help the person who's evaluating your financials to understand how your business is doing. And so if that's wrong, if that's incorrect, then you want to make sure you fix that. So again, we're looking at these changes here. If anything really jumps out, it's a huge leap or a big dip. Like in rent, the rent went way down. Why was the rent 10,000 in the last period, and in this current period it was 3,000? So that's probably something wrong, where maybe we put the rent transaction down in the wrong place, or we have to just find out why that is. And then travel. So travel was only down 10%. That's not that big of a deal. So maybe that's not something you really worry about. But when you see these big leaps like this, either if it's a leap or a dip, this is what you want to pay attention to. I'm gonna just stop right there. Any questions, or can I keep going? Is there anything you need me to repeat? Something you're not sure about? No?
Looks like it's so far so good.
Great. All right. All right. Hey, Deisha, how are you?
I'm great. Thank you. Thank you for doing this, by the way.
Yeah, absolutely. Absolutely. Okay, so then now let's look at the balance sheet. So that was the profit and loss statement. We compared and contrast. Now let's look at the balance sheet. And again, you want to do this for the balance sheet as well. I'm just, for the sake of time, I'm showing you the compare and contrast just for the profit and loss statement. But you want to do the same report for your balance sheet. Now, another thing to look for in your balance sheet, besides the increase or decrease in the numbers from one period to the next, you want to make sure that your assets equal your liabilities plus your equity. And so in this case, it does. So that's good. So that always has to be balanced. If it's ever off, then you know something's wrong with your books, and you need to take a look at why that is. This should never be off. And then also, what you want to pay attention to is your bank account on your balance sheet. So your bank accounts should never be negative on the balance sheet. So if you have a negative number on your bank account, that typically means like either when you created the bank account in your QuickBooks or whatever accounting software you use, you probably had the wrong balance in there when you opened it in QuickBooks, or whatever last entry you had in there is probably wrong, or you may be putting transactions, attributing transactions to that bank account that really didn't go through that bank account, and so that can be throwing it off as well. So again, you want to just make sure on your balance sheet, bank account should never be negative. But as a bookkeeper, and then again, as somebody who's worked in finance, I've seen over and over again that folks have a negative number in their bank account, and that's typically a telltale sign that they're their books are off, and so I'm not looking at an accurate picture of how their books should actually be. So that's just something to pay attention to if you have that problem. Okay. Any questions? Again, if you have any questions, just go ahead and take yourself off mic. And again, this is your time, so don't hesitate. Okay, so now let's just talk about some of the common mistakes to look out for, and what are the solutions for those. So we're just gonna go through a list here. So the first one is not using your accounting software properly. Like QuickBooks, for example. What I see a lot of people do is they'll connect their bank to their QuickBooks, and then so whatever the bank transactions are and whatever QuickBooks suggests for what category it should go in, they just go ahead and they accept that, and they accept it. And like, oh yeah, that was easy. That didn't take me that long to do my books, but that's not the right way, because what QuickBooks often does is gets it wrong. And so that category suggestion is, again, just an automated suggestion. It's not accurate. QuickBooks they're not accountants. They're not making sure that that transaction actually belongs in that category. And they're not making sure that that number is correct, meaning that there's no fraud involved, or there's not a transaction that you didn't authorize. They're not doing any of that. So when you just connect your bank account to your QuickBooks and just accept all the transactions, and you don't actually take the time to make sure that it's correctly set up, that gets you in trouble. And oftentimes, that's what I get when clients come to me is, hey, I was doing my books by myself. I was just accepting whatever QuickBooks said, and now the books are all off, and they need somebody to come and fix it. So you want to make sure that whoever's doing your bookkeeping, whether it's you or you have a bookkeeper, you want to make sure that they are trained and that they have a very good understanding of whatever the accounting software is. QuickBooks is the most popular bookkeeping solution. So if you get a bookkeeper, you have an accountant, or you have somebody that does your books, or you do them, I recommend QuickBooks just because it's so popular. A lot of people know how to use it. So if you're doing your books yourself right now, you want to eventually have somebody else do it for you, probably the best software to use is QuickBooks, because most people know how to use it, that know how to do bookkeeping. I also recommend that you don't use like an Excel spreadsheet to do your bookkeeping. I know some people do that. I don't know why, because it's not as dynamic, it's not as useful as a QuickBooks software that does a lot of things for you. And it's prone to a lot of mistakes that can be very time consuming to fix, because it's all in an Excel spreadsheet and everything, versus being able to fix things in QuickBooks and keep track of where transactions came from, how you corrected things, how you put in journal entries. It's just so much better to use QuickBooks versus using a spreadsheet. So I'll stop right there. Any questions about how to use your accounting software properly? How to know if you're using your accounting software properly? Any questions? All right, we keep going. Okay, so this next mistake is, I already touched on this a little bit, but it's skipping the bank reconciliation. Again, this is when you just connected your bank to your QuickBooks, and you just accept whatever QuickBooks says that transaction is. You just say, okay, I'm just going to go ahead with whatever QuickBooks says. QuickBooks, again, they're not accountants, they're not bookkeepers. It's just a software, and the suggested category is just that, just a suggestion. Not accurate. Most times it's not. You have to actually go in and fix it and make sure it's correct. So you want to make sure that you're doing your bank reconciliation, which is, again, looking at your bank statement and then looking at what's in QuickBooks, making sure those two match. And you're also making sure that you don't see any transactions in there that don't look right. So if you have a transaction on your bank statement that you didn't authorize, you're not sure where it came from, you don't know what it is, then you want to look into that. You want to contact your bank because it could be fraud or it could be an unauthorized transaction. So especially if you're not the only person that has access to your bank, and when you have a bookkeeper, you want to give them access to be able to view your bank account, but they should not be able to do any transactions. So when you give a bookkeeper or an accountant access to your bank account, you only want to give them viewing access. You do not want to give them the ability to take out money or anything like that. So you want to make sure you give them the right type of access. But again, skipping this step of bank reconciliation each month is another way that folks get build bad habits and get their books all messed up. And then when it's time to file taxes or whatever, you're scrambling, trying to get it all fixed. Any questions about how to do the bank reconciliation or what to look for? Okay. Any questions that don't relate to this at all? Or I can just keep going. I might answer your question. All right. Okay. So the next mistake to be aware of that's very common is neglecting to save your receipts. So this might seem like it's very burdensome, but you want to save all your receipts. And QuickBooks has a very handy tool where you can download a QuickBooks app. It's very easy to use. Every time you spend money, let's say you go to the store and use your business credit card, you have to buy something for your company, you take somebody out to eat, it's a business meeting, anything like that, where you're getting a paper physical receipt, you can take a picture on your phone using the QuickBooks app. You can take a picture on your phone of that receipt. QuickBooks will be able to read the receipt, create a transaction for you, and keep record of that receipt for you. It's gonna match up. Okay. So, any questions about keeping your receipts? So, all right. So then also I want to mention that the IRS requires that you have your receipts for 7 years. The best place to put your receipts is, let's say you have a home office, or you may have an office somewhere else. Get you a folder, put all your receipts in a folder, try to keep it in chronological order, and either take pictures of them. You could scan them, put them on, or you don't even have to scan it. If you take a picture on your phone, you can just go ahead, you can email or upload all those to like a Google Drive to make sure that there's a digital version of those receipts and a physical copy, because sometimes it's very easy to lose those physical copies, but it's a lot easier to keep track of the digital receipts. And then also if you have emails, right? So you have subscriptions and all that, and you get your receipts via email as well for anything that was done electronically. So you want to keep those receipts as well. And again, you can upload them directly on the QuickBooks, or you can put them in like a Google Drive. But you want to have those receipts because in the event that you do happen to get audited, you can pull up all those receipts and it'll be able to verify that which you say you spent the money on is what the money was actually spent on. And this is also something to be aware of. The IRS got a lot of funding recently to make sure that folks are doing their tax filings accurately. Now they're probably targeting more like large corporations, things like that, where they can make sure that they get more revenue back to increase the amount of money that the IRS is bringing in. So I'm not saying this to scare you, but it's just something to be mindful of. Like in the event that you do happen to get audited, keep your receipts so that you cover yourself. And again, you gotta keep them for 7 years. Any questions about that? All right, let's keep moving. All right, so now if you fail to track your expenses or you're mixing personal with business, this is another mistake that often happens is you have a personal bank account, and in your personal bank account, you have some business expenses in there. Let's say you got your website, or whatever it happens to be for your business. It's coming out of your personal bank account. This is a mistake because when it's time to file your taxes, your accountant is going to ask for your bank statement. And if you have everything mixed up, the personal and the business, it makes it very confusing and very difficult to do your taxes and figure out what's what. And plus, you don't even want to have to share all your personal information with with anyone. You want to try to keep your business stuff, your business records, give that to your accountant, let your accountant see that, and keep, your personal. So again, to that point, make sure you have a business account where all of your business expenses and all your business income comes out of that. It makes doing your bookkeeping, it makes tracking your expenses so much easier, so much smoother. And again, you can connect that bank account directly to the QuickBooks, and you can make sure that the categories are correct. You can go ahead and do your bookkeeping that way. Versus, again, don't use your personal bank account because it's going to mix everything up. It's going to make it confusing. And that goes for your credit cards and your debit cards as well. Have the business credit cards, the business debit cards, and the personal. Any questions or thoughts about that? Nope. All right. Go to the next one. So I mentioned this already a few times, but over relying on automation. So again, you can connect your bank account to the QuickBooks, but you should not just accept what QuickBooks is saying. You should, if you don't know accounting, get an accountant, get a bookkeeper who can make sure that those transactions go in the proper categories for you so that your books are accurate. Because if you just rely on automation, it doesn't know everything. It doesn't know what every transaction is. And very often it's just picking something random and it just has it there. It may not have nothing to do with what you actually spent that money on, or it doesn't know whether or not money you received was from a sale or from money that you're putting into your business. So, and all these things go in different categories on your financial statement, and they're all very important because, again, this helps with you understanding how your business is doing and helps you to make the right decisions for how to manage your business. And whether it's a grantor or a lender or an investor, it helps them to analyze your business. So you really want to make sure everything's in the right category. Don't just rely on the automation. It is not going to get it correct for you. So again, make sure that you get some help. And if you don't know accounting, if you don't know where things are supposed to go or how they're supposed to be tracked. All right. I'm gonna always stop at each one just to make sure how we doing. Any questions? Any thoughts? You have a personal situation that you want some clarity on? All right, let's keep going. So now let's look at the next mistake here that's very common is having things that should be on your balance sheet or should be on your profit and loss statement on the wrong financial statement. So this is really common when you don't know accounting and you don't know what's supposed to go where. And so this can throw off your books when you're categorizing transactions, or you need to fix something. And if you don't know if it's supposed to go on your balance sheet or your profit and loss statement, or if it's supposed to go on both, but how it's tracked and how it's done, then this could really throw off your books. And this is something that I see often is that one of the reasons why with the balance sheet is saying and with the profit and loss statement is saying why it's so off and it's not matching up is because things were put in the wrong categories in the wrong places. So probably the best way to handle this if you have this issue, just go ahead, either get an accountant, get a bookkeeper that can take care of that for you, help you understand how to categorize things. And typically, when you're working with a bookkeeper or you're working with an accountant, when you first start working with them, what they'll do is they'll analyze, they'll look at your balance sheet, they'll look at your profit and loss statement, also known as the income statement. They'll look at those statements and they'll look at how transactions were done, and they'll find those mistakes for you if you don't even know. Like you may not even know that those mistakes are there because you don't know what you don't know. And also, you're not an accountant, you're not a bookkeeper, you're a business owner. You might not just know these things. So, but they can help identify that and help you correct those mistakes if you're not sure what to do. And I should also mention that sometimes it could seem like it's an easy fix and it should just be a matter of just moving it from one category to the next. But behind the scenes, it can get really complex because things have to balance out. There's a certain way that you have to correct things. It's called, sometimes you have to make a journal entry, or there's a certain way in QuickBooks you have to fix a transaction if it's in the wrong place. So I would say if you are going through this process, don't wait until the last minute. Like, don't wait until you need to file your taxes. Don't wait until the very last minute of you're trying to apply for financing or apply for this grant. Don't wait till the last week to get this looked at. This is something that you want to give yourself plenty of time because it can take time to fix mistakes if there's a lot of them, or if the mistake is kind of complicated in order to fix it. So that's just something to be aware of as well. Don't underestimate how long it will take to fix something. That's another mistake that I see people make. So we already talked about this. I won't go into it too much, but we talked about miscategorizing or over categorizing transactions just because you don't know how to do the accounting. So just again, same way to fix it is like, let's just say you're not at the point where you can afford a bookkeeper, or you just want to engage your accountant around tax time. And then you can try to learn these things, but I will say it is a learning curve to really learn accounting if it's not your thing. And you just want to also keep in mind, like, do you want to invest that time into doing the bookkeeping or getting an accountant, or would you rather spend your time doing what makes more sense for your business, where you can be more effective, where you can help make more money, and you pay somebody who's an expert just to get it done? But I also understand, like, it's just may not be realistic if you don't have the budget. So you want to understand what your situation is, and you want to also just ask. Like, you may think you can't afford bookkeeping, but you may be shocked that you can actually afford it. And you should look at it kind of like as an investment, right? Because if you're able to free up your time, spend more time on your business or doing things that you like to do, then that helps you be more effective. That helps to grow your business, because now you're doing the things that really matter, and let somebody else that knows what they're doing take care of your books for you. So it's just something to think about as you're cleaning up your financials. So here's another issue that I see is overstating how much revenue you have. And what I see, like how this happens is, so you can create invoices, right? You can create invoices in QuickBooks, or you may have some other software where you're creating invoices, and then you're double counting the transaction. You're counting it when the money hits your bank, and then you're also counting it when QuickBooks or whatever system you use alerts you that the revenue has been taken care of, or you count it before it's taken care of because you're not checking it correctly. So it's just something to be careful of, is making sure you're not overstating your revenue, because again, you don't want to be paying more taxes than you have to, and you don't want to overinflate your revenue thinking that you have more money than what you actually have, because that can again mess up your cash flow. So you may end up not having enough money in the bank to cover your expenses. So just be really careful with this. I do see this happen, and also like if you have what's called cost of goods sold. So if you have expenses that are directly tied to the service that you provide, or expenses that are directly tied to what you sell, then you want to make sure that you're accounting for those properly. Because if you don't account for those properly, then it can also throw you off and make you think you have more money than what you actually have. And then, so let's say you do have a bookkeeper. What I find is, if you're not properly communicating, or your bookkeeper is not properly communicating, if the relationship between you and your bookkeeper is you don't really talk, you don't have a lot of meetings, it's just very transactional. If you have that type of relationship, then the bookkeeper is not going to understand your business. And if they don't understand your business, they are going to make mistakes, or you're just not going to be satisfied with the level of service that you're getting. Versus if you talk a lot with your bookkeeper, y'all understand how to work together, and they understand your business, then they can make sure that the transactions are in the right categories, and they can also make sure that the proper work processes that work for you are in place. So communication is key. And also I would say that, not making an excuse for anyone, but if you're not hearing from your bookkeeper, reach out. Be proactive. Don't wait weeks and weeks and weeks on end. Just reach out to them maybe once a week or once every other week, and just ask them how things are doing, how are your books doing, do they have any questions for you? And again, it's not to like feel like you have to be on top of people, but you just want to make sure that the communication is open, so that if there are any questions or any concerns, it can be addressed. And it is your business, so you want to make sure that ultimately the financial statements, everything being accurate, being done correctly, is going to affect you. So you want to make sure that you're communicating and working with your bookkeeper or your accountant to make sure everything is running smoothly. And I recommend that you have meetings at least once or twice a month with your bookkeeper, just to look over everything, ask any questions about transactions, look at how your business is doing, what can you be doing differently. So yeah. Any questions so far about anything finance related, anything that bookkeeping related, anything I talked about? Okay. So last but not least, or I don't, is this last? Yeah. So last but not least is trying to do the books yourself. This is a common mistake because if you're not an account or if you don't know accounting, you can really mess up your books. And if you mess up your books, then you have to hire somebody to fix it. But fixing it can be very time consuming. You may think that it's easy and it's just oh, they'll just go in there and they'll be able to see it real fast and be able to figure it out. No, because people have to figure out what is the story behind here, what actually happened, and where should they actually go. And again, QuickBooks can be very complex, so editing something, fixing something may not be a quick fix, easy fix. You have to compare your bank statements. You have to make sure transactions are recognized in the proper categories. You have to go in QuickBooks or whatever software you're using. You have to fix those. Those things take time. And then of course, like if you need your books fixed fast, quickly, like let's say you're getting ready for tax filing, or you're applying for a loan, you're applying for this grant, and you need it to be done fast, then you might have to pay more than what the monthly rate is for the bookkeeping in order to expedite it, right? Because that typically when you have a bookkeeper, you're paying them a monthly rate. That monthly rate is for regular services with a certain amount of hours expectation on a monthly basis. But to really like fix your books, like something that was supposed to be done right all year, can take a lot of time. So you may have to pay whoever you're having do that, whether it's your accountant or your bookkeeper, a separate fee to handle that special project. All right, so that's all that I have in terms of what mistakes to look for, how to fix them. If you want, I'll make sure everybody gets a copy of this. I'm gonna give this copy to Deetra, make sure she has it so that she can give this to y'all. Y'all can take a look. This is my contact information. You can, again, in the email when this goes out, you can always reach me. There goes my phone number and my email, and I'll go ahead and put those things in the chat as well. So any questions?
Anthony, I think this was great. I really appreciate you taking the time to share with everyone that was able to be on live with us today, and everyone that's going to check out the replay later. So thank you for that. There was a few things that you mentioned that I'd like to just double back on, because I know we're going to have some folks asking those questions. We usually do about this time when people are applying for the MBE grant. So one thing that we've noticed is that sometimes instead of businesses submitting their business bank account, they may submit their personal bank account statement. How important is it for a business owner to make sure that they have a business banking account rather than a personal banking account?
Yeah. So for that very reason, right? Because you as a or whoever's reviewing the grants, or whoever, if they apply for a loan, whoever's reviewing those bank statements, they don't know what transactions are what. They don't know what transactions belong to the business and what was personal. So when they're evaluating your business and seeing, okay, where you at from a cash position, they can't really figure it out because everything's mixed up. So you want to just make sure that you get a bank account that's for your business. I use PNC. I really like PNC. No knock against Bank of America. I don't know if they are a donor of Greater Winston.
Every wonderful bank around the Triad area is a member of Greater Winston-Salem.
All right.
So
well,
we suggest everybody, whoever works best for you.
All right, yeah. That's a great way to put it. Let me not mess up any money. Yeah, so that's a great way to put it. I'll just say some banks are better than others. Um, so just keep that in mind as far as like who to bank with. Some banks are again more friendlier. It takes a shorter amount of time to get that bank account set up. What you need for your bank account is your filing statement. So you file that with the state of North Carolina. You can find that on the Secretary website for the state of North Carolina. You can print out a copy. So you need that. Your filing statement, or if you file with a different state, like you might have your company might be in Delaware or something. You want to get that filing formation form, and you want to get your EIN from the IRS website. It takes 5 minutes and it's free. Don't cost you anything. It also doesn't cost you anything to get a copy of your formation. So you need those two things. And then the bank may have a certain requirement of how much money you got put in. But it's very important to get out of your personal. I know sometimes when you're starting out, you may, get started and have to do a couple of things before you have your business bank account set up. But if you've been around for a while, just go ahead and get that business bank account so you keep your records straight. And if you end up having to submit the personal bank account, because it is what it is, it's already done. You can't go back and fix it now while you're applying for the grant. Highlight what those transactions are. And again, that's going to take more time. It's going to be time consuming, but if you do have a personal bank account, there's nothing else you can do about it. Highlight the transactions that belong to your business so that whoever is reviewing it, they can see what's going on.
You shared with us the profit and loss statement as well as the balance sheet. Will you just explain again really quickly the difference between the two? Because we do ask for a profit and loss statement, and we also ask for an annual budget for the following year. So we're in 2022. We want an annual budget for 2023. So what would they need to submit?
Yes, that's a good question. I think if I can go back. All right, so this is the profit and loss statement that's comparing one quarter from the other. I don't know, Deetra, do you ask for quarterly financials or?
We ask for up to the point that you submit your application. So it can be listed quarterly, it could be listed, it could have all of them mushed together for the year. However they want to break it down, but we need it we're in 2022 from January 1 to the time that they submit the application.
Okay, got it. So I would say just like from a profit and loss standpoint, so your profit and loss statement, this is looking at the operation of your business. So it's looking at what money did you bring in? That's that total income. And then if you had any expenses that are directly tied to whatever you sell, it would come out before your gross profit. And it will show you that. And then all your operating expenses. So this is whatever is not directly tied to your sales, but if you have rent or you're traveling, meals, banking, whatever those expenses are, they go on this bank statement. And then you get what's called your net income or your net loss. So in this example we see here, for this quarter, they lost money. In this quarter, they made money. But then you should also just be aware that whatever you see here is not necessarily the money that's going to go into your bank, because you may have had other expenses that don't go on this profit and loss statement. And your accounting software will be able to take care of this for you. But so that's what your profit and loss statement is. And then your balance sheet over here, your balance sheet is showing you as a snapshot of the status of your business. So it's not looking at how you performed in operations over a period of time. Instead, it's looking at where's your company at right now? What does your bank statement say? What are your liabilities? How much do you owe in loans? And how much you have in equity in your company? So and then in terms of like how do you make a budget for the future using this information? So again, if you do this comparison, well, let me go back. If you do this comparison and you looked into these numbers and whatever jumped out, if you know like, okay, I actually know what that is, it's not a mistake. So if you know these are correct, then you can kind of use this, how you did the previous period compared to the current one, to help you with making the budget. So if, oh, my bad. So if your bank charges went up 150% over this period of time, then it may do the same thing as you steadily grow. Now, your budget should also match your business plan. So if you have a business plan, or you have a strategy, you know what you want to do, your budget, whatever you're saying in the numbers, it should match up with what you're saying in your bank statement or whatever your strategy that you're sharing with the funder, so that it makes sense. Any questions or thoughts on that? Oh, you're muted, Deidre.
Sorry, that's perfect. Thank you. For those that may not have QuickBooks right now and they need to get their budget and their profit and loss statement taken care of differently, are there any other resources that you may have that you can share with them that we can email, or there's possibly something else online that may be a free tool until they can work themselves up to getting QuickBooks or some other kind of accounting software, or hiring a bookkeeper?
Mm-hmm. So I have an Excel spreadsheet for how to create a budget for your future projection. I can share that. It's pretty easy to follow along. It's going to just ask you on a monthly basis, what do you think your sales are going to be? What do you think your expenses are going to be? And it's going to be pre-filled. It's going to have expenses in there already listed. If those expenses don't apply to your business, you can just go ahead and type over it with what actually does apply to your business if it's not listed there already. And if it's already there, then you just go ahead and you just delete whatever you don't need from that spreadsheet. It's pretty easy to follow along. I would say also Small Business Center is a great resource for Site Tech. Small Business Technology Development Center is another great resource. It's free for helping you with creating projections. And I would also say when you create your projections, it's good to have like a very detailed understanding of why am I putting this number here. So you want to have a justification for what you're saying. But I would also say you don't need to spend a ton of time, because again, it is a projection, right? So it's not necessarily what is going to happen. It's what you think is going to happen. But as we all know, you have to adapt. So don't feel like overwhelmed with creating these projections. I would say spend a good enough amount of time, but know when you feel like you're spending too much time on it, whatever that means to you. Go ahead and give yourself a break, because it doesn't need to be like perfect. It's not going to be perfect. But yeah, so there's a free spreadsheet I can share, and those are some free resources that you can use for creating your budget. Free bookkeeping software I don't know of, but I will say this: if you can't afford a bookkeeper, there are bookkeepers that will train you on how to do your books, and that typically costs less because you're doing the books yourself, but they're going to train you and show you how to do it. I offer that service, but I do know that there's other bookkeepers that offer that service as well. So you can always just reach out and see if that's an option for you, if you can't afford to have somebody do it for you.
That is perfect. Do we have any other questions from those listening today or watching today? doesn't look like we do. Anthony, thank you so much for taking the time to share with us today. And thank you for sharing those resources for everyone watching. We'll make sure that we add those to the email that goes out, as well as on the landing page where this replay will live. Again, if you want to get in touch with Anthony, his email address is info@bluewaterbk.com, or you can visit his website at bluewaterbk.com. Thanks a lot, everybody, for joining us.
Thank you. Oh, can I say one last thing? I forgot my shameless plug.
Shameless plug. Go ahead.
All right. So I hope you got some good information. My only ask is, if you feel compelled, that I hope you can see this. I have a book drive that I do each year, and the book drive is for kids in the Triad and in Durham. And basically, what I'm trying to do with this book drive is give these kids books that will inspire them. And so if you have a book that really inspired you growing up, that you really like and you connected with, I do this donation every year. The last day to donate is December 3rd. So you can contact me directly and donate a book or 10, however many you want to do. But yeah, so I have that going on as well. And so I hope you consider doing that. Thank you.
That is awesome, Anthony. Thank you for sharing that. That was a great plug. Great plug. All right. Well, thank you again for doing this. And to everyone watching, thank you. Again, if you have any questions about the MBE grant program, you can just go to our website at winstonsalem.com/MBE grant. Thanks a lot.